All right, so this is the monthly chart on Canoo, and as you can see, price is still in a downtrend. However, at the moment, price is pausing near the 25-cent level. Going to the weekly chart, you can see that downtrend a bit better, as you do have price respecting the 13 and 26 simple weekly moving average. The most recent support gave back in early October. However, the good news is that potentially prices is in the process of making a double bottom, which would potentially be a bullish price action structure if this W pattern plays out and we can close above the apex of this W. Good news is that the most recent sell level was breached. That was established back in mid-October at the 34-cent level. So let's take that off the chart. Now, here's the bad news. So Canoo has huge ambitions of becoming an EV manufacturer so far. There's more ambition than business. In fairness, though, the company did achieve an important milestone in the third quarter. They generated revenue. Here's why that's not nearly enough to make the stock worth buying today. It isn't easy building a car company from scratch. It gets extra complicated when you add it in that Canoo is looking to make EVs, a newer technology than the combustion engine that power the vast majority of the world's cars and trucks. The company is now staffing up a manufacturing facility in Oklahoma. Is a statement to what it has achieved. So too is the fact that it reported 519,000 in revenue in the third quarter, which is great because prior to that they haven't sold anything. That's basically the first time the company has reported revenue, so that is a huge milestone. It means Canoo has actually managed to sell something of value. To date, money has just been going out the door to pay for building the business that management hoped would one day, generate some revenue. While the top line of the earnings statement was a welcome surprise in the quarter, the rest of the news from the company remains touch and go at best. For example, as you move down the income statement, you see that far more money is going out than coming in. As an example, the cost of goods sold was 903,000, leading to a negative gross margin of 384,000. Then there's the cost of research and development and selling general and administrative expenses, which were 22 and 25 million respectively. From the operations, this equated to nearly $49 million in losses. All right. The big picture here is that Canoo does not generate enough cash on its own to fund the business it is building. This isn't shocking given the scale of what it's trying to create, but there are very real costs that must be paid, and the money has to come from somewhere. That somewhere has largely been the capital markets via debt and equity sales, meaning selling the shares. The company has some debt, notably including convertibles, but the real story is the stock sale it has used. The problem is even uglier when you consider the stock price has plunged over the past 2 years. The lower the stock price goes, the more shares it takes to raise the same amount of cash. The company needs the cash to continue spending on the development of its manufacturing facility and to fund its research and development efforts. So this is just showing that as the price has gone down, the average diluted share outstandings have gone up, meaning shareholder value is just getting killed each time Canoo has to issue shares to the capital markets in an effort to raise funds, in an effort to keep the business going. For most investors, this is not a great investment choice because there is a very real risk that it will be unable to stay afloat. Indeed, at this point, if Wall Street decides to stop providing cash to Canoo, its outlook would darken considerably. Even aggressive investors might want to wait until the company turns profitable before considering this stock. From a technical standpoint, the chart suggests you want to wait until price gets at least above the 45-cent level before considering adding Canoo to your bag. For those who are already in, well, bottoms might be in, so you could see price rise in your portfolio, at least for Canoo, to start moving higher. But still take a wait and see approach going into 2024. Again, maybe the bottoms are being established. Thanks for watching. Subscribe. Please like the video.